Good morning, ladies and gentlemen. This is Clueless 8, and this is the pre-market AM report for May 14th, 2015. As we can clearly see that despite all the tea leaf reading and all the detailed analytical procedures, the discipline procedures that I follow on the technical side, markets can do what they want. The futures open today up 11 and a half right now. Um, and despite the fact that there was a few hidden bearish negative readings on the VIX, RVX, as well as on my swing 533 charts, which left me with my hedges in position in the SPY and the IWM. I did trim the SPY just a little bit. And the IWM position is on. Keep in mind, very, very importantly, hedges are hedges. They are not large scale positions, which are the predominant position in your portfolio. I still believe that we're going to have a strong finish to May. I have repeatedly said that monthly expiration, which is tomorrow, is a bullish event, and I was expecting a nice, sharp, quick pullback ahead of that on Wednesday. However, it looks like the pullback that occurred, you can see the E-minis right in the background, that occurred and ended around 3 o'clock, to be honest with you, on Wednesday. And it started on I'm sorry, the pullback that actually started on Monday could have negated, looks like it negated the Wednesday pullback. The Wednesday didn't look really like a constructive day, in my opinion. But then you know what? It's just one of those things there where the market will do what it wants to do despite our valiant efforts to go ahead and try to analyze it. So here's Wednesday, 8 a.m. That was yesterday. We pulled back and reached the low around, we actually got a low print around between 2 and 4. In fact, this is 3 o'clock right here you're looking at, and we reached 2091 at that point. Um, Bottom line is, this is after hours, and then at around 3 this morning, it looks like we got back, retested this. Let me try to draw this. Retested this 2091 or 2092, let's call it, on the E-minis. That translates into roughly 2097 or 2090. I'm sorry, it equates to 2099 or 2100 on the S&P 500. There was a double bottom. This is all, while we're in La La Land sleeping, and then bang. So futures traders obviously saw that happening, and we have a terrific one among our midst, who goes by the name of KG. By the way, a little plug here, we'll be offering futures courses and sessions and seminars shortly. We might include him in one of the packages to give a 1 hour session on that as we move forward. I highly recommend, as I have been doing very vociferously, that every member, and I mean every member, need to sign up for the advanced coaching sessions, whether it be the one-to-one or the group sessions, in order to fully understand the power of my charts and why more than 80% plus, in some cases 90% plus, of my forecast, short term, intermediate, and long term, in fact, long term it's 100%, have been accurate and on the ball. So, saying all that, let's go back to seeing what's happening around us right now. So, looks like the Monday pullback negated the large Wednesday pullbacks that we're normally used to. Um, I was expecting a pullback down towards the 2080 level based on all the action that I was seeing. That's a volatility cluster. You're looking at it here, and but that didn't happen. That was truncated, as they like to say, right here at the 2090 level, and now we're up here. Now we do have a minor resistance at this point, and it used the word minor resistance right there, as you're seeing behind you, and a quick pullback down to 2100 is possible. Okay, is possible. That retest the 34, the rising 34 and the 50, which is bullish, and at that point we could possibly see a move up that completes this pattern, short-term pattern, around 21.14.59. Is it possible by tomorrow? And these are the markers that I'm looking at. Um, Now keep in mind, if it gets up to 21.15, that's going to be the fourth attempt to break this level, going all the way back to Monday, the 4th of May. So if it hits that, I believe that we're going to move higher. We're going to move higher and then test that the infamous 2120 on the E-minis, which translates into 2128 or so on the S&P index. Now, these are definitely bullish patterns. There's no question about it. I did expect a larger pullback. Who knows? Might get it today. And the key point is, and I want to remind everyone that I still have longs that are running. If you look at my Twitter feed, yeah, you will see that trading longs in Mastercard, in SHAK, SHAK, which is a terrific winner already. The winners. I'm sorry. I also mentioned. All the or some of the drug stocks. My general bias remains bullish. There's no question about it. Priceline, terrific one, which is up about $4 or $5 right now. So all those longs are in place, trading longs, mind you. So saying all this, let me get all these lines out. Very important that all of you listen to all this, and I'm just giving you a quick synopsis of what is covered in my session, because I'm going to draw this line here. And you can see that if we cross over 2111, 2111.43 or thereabouts, maybe I need to finesse this a little bit. Okay, how about 21? Let's call it 2112. 2112 translates into 2120 or so. If we cross over that on the S&P, then we're going to basically make a new high. And this is definitively, and this pattern is a big one, an inverted head and shoulder. I remain, and that's the point why I remain consistently bullish through all these massive moves. This is an inverse head and shoulder with a large head. This is left shoulder. These are minor left shoulders. And as you can clearly see, this pattern is repeating itself. So saying all that, there is a very high probability at this point that 2120 is going to get breached. And it possibly can happen by Friday, so, which is tomorrow. Despite the fact that no one would think that that can happen, it's going that way. Let's take a quick look at the TF, uh, which was exhibiting negative patterns. And if you look at the difference between the S&P futures chart and the Russell 2000, you can clearly see that you can interpret it two ways. You can call it a large opportunity, which is still possible, in my opinion. Any sort of reasonably strong data coming out of the U.S. economy moves the U.S. small cap growth because they are really domestically orientated. So a stronger U.S. economy means larger profits. That's very simple terms on the small cap 2000, because that's where they dominate. Multinationals are the ones that get hit by higher dollars and multinational and other macro economic factors overseas, because that's where they generate most of the business from. So looking at this picture here, this is again, start get this line here. You got a large triple bottom, quadruple bottom head. You got a left shoulder, a low slung one, mind you, which held. We did play this. And then you got some minor ones here, if you want to look at it. Here are the minor ones, right? And then at this point, any break over 1240 and a entry into this channel will bring it up to 1270 and an overshoot into 1275 very quickly, because patterns do get repeated. Said this a zillion times since the beginning of my service back in 2014, and saying it again. This large drop, this large waterfall decline, in my opinion, will get reversed. So it's just a matter of time. And if it gets reversed, where does it go? It goes to that volatility cluster, the sell zone right here, where there's a lot of selling, and that would bring it up to pretty much at this level, right? So all matches. At that point, you could get a pullback down here. This is all pattern symmetry. Pull back down here to this breakout level again, test it, and then make a move up. Is this possible? It's very possible. So I'm going to still be playing the IWM RUT arena, and um, and as long as we don't break below, 1225, this pattern remains intact. Any large break below 1225 would negate that pattern and bring us down, testing these levels down here, obviously, and then I believe that that's also a nice support level. So that's it. So as long as you know your surroundings, you're aware of what's happening behind you, I believe that you will be very successful in what you do, because the stocks that we trade in and the stocks that we do generally are, they're all trading within the framework. Um, all my stock charts are posted on Twitter feed, as well as on the website for all new members. You can go to clueless8.com, obviously. Very important. Go to the members area. Everything that's offered within my service is right there. Click, explore, discover, and profit. That's my, that's my solid suggestion. Let's look at the NQs, which are ripping right now, and this is the Nasdaq 100 futures. They are up 32 points. What am I doing wrong? Okay, there we are. So this is a very constructive pattern. I showed this yesterday, and price line and a couple of these stocks which have room to move. Now keep in mind another very important thing here. I look at stocks which are pummeled down, things that can move up, 50% retracements. That's where the large money is made. I'm not saying that you can't chase the apples up a couple of points, but Apple going to 130 and price line giving me 30 points, hey, or rest my case. So again, I play these all the time. So this is a constructive pattern on the, to be honest with you, on the Nasdaq 100, which includes the price lines, the Apples, the Googles, the Amazons, the Teslas, you name it. Many of them have been large winners, almost all of them. So let's look at this pattern for a second here. It's amazing when you study pattern symmetry what you can see. It's like art appreciation. You need to know the little bit of history. You need to know who the actors are. You know who the artists are in the case of art appreciation, and then you basically then you understand these better. It took me a while. I'm a very passionate student of the market, and I encourage everyone to learn. No one taught me like this, to be honest with you. It's all self-taught. So at this point, a break above this line here, obviously, as you can see, would mean that we're going to make a quick sharp move up to this supply point, or this was the bearish engulfing, and that would bring us up to this level. There should be little resistance here. At one point, we will traverse and go up to shoot up to about this 4560 level. What does that all that mean? It simply means that the tech sector is going to zoom. Now, when that's going to happen, I really can't tell you right away. Let's take a quick look at oil. I know Okay, oil chart I keep on posting, so everyone should be tracking them on their own thing. This is the hourly chart, which is good to look at. And at this point, I drew a negative thing on oil because that's what it looked like. You seem to have a double top. You seem to have a double top. This is definitely a naked bar spinning top, which played out very well. Okay, down here. So at this point, this can be construed also as a naked bar. So there are some. And you can also look at it as a double top here, and and like I drew it, technically speaking, technicals don't always work on our time. You can be looking at 58.50 as a intermediate bottom. If you want to look at a longer term chart on oil, all you got to do is click the daily button. In this case, in my opinion, it is bullish, because at this point, this is still, keep in mind, this is still, in my opinion, in my observation, a what we call a bear flag. Okay, it is a pattern symmetry that's being replicated from here. As you know, I was very bullish on oil all the way through. I'm still bullish on oil, but I'm not an oil analyst. But I did call these bottoms, and double bottom here. And if we break out over, I believe that we can get to go past 70.